Now, the Elliott wave theory is a market forecasting tool, a technical market forecasting tool that was postulated by the man called Ralph Nelson Elliott in 1938, and since then it's been used worldwide by market forecasters, market analysts to forecast any financial market at all, any financial market that involves a lot of persons, that involves a lot of volume. Elliott wave theory has been used since 1938 to do that. I want to take us through some of the things I want us to know before we go to the main analysis of today. So I hope we can see my screen. If you can see my screen, please type hi. I want to be very sure that we can see my screen. Okay, fine. Thank you. Now, why Elliott wave? Why do we want to be? Why is Elliott wave such an important tool to us? So why do we want to be using Elliott wave? Now, the first thing here is that the Elliott wave has a multi-area application. What I mean here is that the Elliott wave can be applied to analyze any market at all, whether the currency market, the stock market, the commodity market, the bonds, and so many other global markets. So the Elliott wave theory can be used to analyze all these markets. Okay, so once you learn the Elliott wave, you are having in your hand an important tool that can be applied to so many markets using the same principle, using the same theory, the same guidelines that the Elliott wave principle provides. Now, the second reason why the Elliott wave is such an important tool is that it clearly defines, differentiates between a trend and a correction. As a technical analyst, or let me say traders who make use of the technical analysis, we know that according to the technical analysis, markets, okay, financial markets, they are in trends and corrections. But oftentimes, or let me even say, oftentimes we traders will find it so hard to identify what a trend is and what a correction is. In fact, so many times we find it so hard to differentiate between them. So the Elliott wave has actually dealt with that. It helps us to clearly define what a trend is and what a correction is in a particular market structure, and whatever the time frame is. Okay, the Elliott wave has actually helped us with that. As we continue in the webinar, when we go to the analytical part, we'll also attest to this. Now, the third reason is that it provides targets for trend terminations and continuation. When the market is in a trend, we ask ourselves, when is the trend going to end, for us to know when the correction is going to start? Or when the market is in a correction, how do we know that the correction has ended and the trend is about to resume? These are very difficult questions that we always find hard to ask. But with the use of the Elliott wave theory, all these things have been simplified and have been answered, because the Elliott wave theory, among other things, provides targets for trend termination. So when a trend is, when a particular market is in a trend, the Elliott wave theory actually gives us where we should be looking at as termination is concerned. The termination of that trend. Where and when is that termination? Is the trend going to end? Okay. And when we're in a correction also, when is the trend going to continue after the termination of the correction? So these are very, very distinct things that makes Elliott wave to be a very definitive system of forecasting the market. Okay, now the next thing is Elliott wave provides specific entry and exit targets. Gives us entry. When do you want to buy gold? When do you want to sell silver? At what price do you want to buy the US dollar to the Japanese yen? Or any of those things. It provides us specific entry points and targets. Okay, when you place a buying order, for example, based on a pattern, an Elliott wave pattern that you are able to see, then the Elliott wave helps you to determine your target. Helps you to determine your target. Excuse me. It helps us to determine our target. And the next thing is that it provides the point of ruin. And we know that as a market trader or an investor, we know that we can't be right all the time. But a tool, a very good tool, should be able to provide us a point where we are wrong. So every Elliott wave pattern has its own invalidation point. And now a trader can determine that right in time and place a stop loss order there. So Elliott wave analysts or Elliott wave traders, they make use of stop loss orders because the point of rain is already given to us. That is the point where we are wrong. So the Elliott wave is not perfect. Nothing in the world is perfect. Okay. And then the next thing is it helps to avoid over trading. So as somebody that makes use of the Elliott wave, you are not going to be getting trades all the time. You're not going to be getting trades. You know, you won't be entering here and there, entering trades here and there, because these patterns are very specific. They take time to form. So as an Elliott wave analyst or an Elliott wave trader, you learn how to be patient with the market, how to be patient for all these patterns to be completed before you take the next step. Okay. Okay. All right. Thank you. So let me take you to the next slide. Oh, okay. There was a noise coming from one of the attendees, so I had to mute that. Sorry. So we can continue now. Hello. Can we still see my screen? Okay. Okay. We can still see my screen, right? If you can see my screen, please type yes. You can still see my screen. Okay. Thank you. Now what we see here is the Elliott wave. Basic tenet of the Elliott wave. I won't waste too much of time. This is not actually for Elliott wave training. It's for us to know how I view the market using the Elliott wave for the week and then even the coming weeks. So the basic tenet of the Elliott wave simply says that every market, according to the Elliott wave, move in 5 waves in one direction and then in 3 waves in the other direction. So when you are looking at a trendy move, you are expecting a 5-wave move in the direction. Let's say the direction is downside. Okay, then you are expecting a 5-wave move downside. And then once this 5-wave move is complete, you see a 3-wave correction. And this continues like that. Okay, another correction here, another move downside, another correction here. And that is how all these things are formed. Okay, this is the first wave, the second wave, the third, the fourth, the fifth. So at the end of this 5-3-5-3-5, you now see another a longer term correction forming this way. Okay, so that is how the Elliott wave theory is structured. That is how the Elliott wave theory is structured. So we are not going to be looking at the Elliott wave theory per se. That's going to be something for another time. It's going to be something that we'll be doing for another time. So let me quickly take you to the market so that we can see what I'm talking about. Okay, so I will take you to my my MT5 tool now. Okay, so this is my MT5 tool. Let me okay, so this is my MT5 tool here, and I'm going to start with the major pairs. That is the US dollar currency pairs. I'm going to start with all those ones. So I'll be starting with the euro US dollar. I have already a preset template for that, so I will not have to be drawing them. Okay, so this is euro US dollar. Okay, which is actually one of the most traded currency pairs. And from here, we can see that the price, price advanced in 5 waves. I told you the other time that after this kind of waves, after this kind of movement, the next thing you're going to be expecting is a correction. So that is a 5-wave move here, then a correction here. Okay, there's a correction that is happening around here, and we don't know if the correction is going when the correction is going to end. But with the use of the Elliott wave, this is so simple, because after this kind of move, you are expecting an ABC correction. And for those of us that are so used to the Elliott wave, you understand what I'm talking about. But for those of us that are just hearing the Elliott wave for the first time, or people who have not laid their hands so well on the Elliott wave, this may sound somehow difficult. But like I said at that time, that this webinar is not, the essence of this webinar is not to train us about, to train us about the Elliott wave. I just want to use it for, okay, someone said you are a novice. Yes, of course I know. Very soon I'm going to start a series, a light series for novice Elliott wave users. So this is A, B. So I'm expecting a C, okay, downside, because the A wave here is a 5-wave pattern, the B wave is a flat pattern, and then the C wave is expected to be a 5-wave pattern. Okay, this is wave 1, wave 2, wave 3. And presently we can see that okay, Janice. Okay, so after that, there is a 5-wave move that is happening around here. 1, 2, 3, and then the 4th wave here is looking like a pattern that I can recognize very well. So after the formation of this pattern, I'll be expecting the original to fall to, down, okay, to somewhere around here. But that is going to happen after some time. But let's look at what is happening now. So put our focus on this 4th wave and see how we can take advantage of the next big move, because that is the essence of the Elliott wave theory, to know when a correction is over so that we can take advantage of the next trend. The currency market is a very trendy market, so we always want to be part of the trend, like this kind of move, okay, like this kind of move, like this kind, and this kind of move happen in the direction of the trend. There's, you can see them, they are very fast move. So let me take us to how this 4th wave, or what pattern we are having here. So let me take us to the 4-minute chart now. 12 hours, okay, 12 hours is fine. So from here we are having a triangle pattern. A triangle pattern is this is a converging triangle pattern. The kind of it's a consolidation pattern where the price of the of euro US dollar in this case is contrasting. Okay, this is an A wave, a B wave, a C wave, a D wave, and a E wave is about happening. Okay, and each of these waves you can see that is a zigzag. A triangle pattern is made up of 5 zigzag moves, okay, that are contrasting. Okay, you can see the way it's squared, it's contrasting. A, B, C, A, B, C, A, B, C, A, B. So what I will be expecting anytime, maybe now, next week, or even later time, is for price to move up to this level. Okay, it is not at this level that I'll be looking for a selling opportunity. So I have to be patient to wait for price to get here. If price does not get there, then I have to look for another way. Okay, maybe the price is saying something else, and that is one of the beauty of the Elliott wave, because the Elliott wave, once the pattern you are looking at is not happening, okay, then you have to look at an alternative way of seeing the market right from that point. Okay, so but at the moment now, I'll be expecting price to get to this level before I put a sell order. So this price level here will be a very good selling zone for us. As okay, to be a very good selling zone for us. So even if you take this down a bit to the 4-hour chart, okay, this is an A, B, C, X, A, B, C, we can see that price could actually move to this zone. Okay, I'm not going to buy here. I'll wait for price to get to this place, okay, before I'll now be looking for a selling opportunity. Okay, down there. So at this moment now I'm neutral about the euro US dollar. So I'm trying to be patient and see what price has to say when it gets to this level. Okay. Now the same thing is almost happening here at the cable. The cable is also moving in a kind of contrasting triangle manner. Okay, after this formation, you can see that a 5-way formation is also moving downside. This one for the cable, okay, is moving. You can see 1, 2, 3, 4. Even the third wave is not completed yet, as price is consolidating in the fourth wave of the third wave. So once I will also be very patient to see if price can move this way, complete the triangle, and then put a sell order. Okay, so that is right around here. Okay, sell order right around here. That is A, B, C, D, E. So that is where I will be looking forward to sell. So it is at this point that the pattern is going to be complete. Okay, so it is at this point that the pattern is going to be complete. So as Elliott wave analyst or trader, we wait for patterns to complete. So this A, B, C, D, E. So in the nearest time, or even in weeks to come, we may see cable coming down, going up, and then after this pattern is completed, I'm going to put a sell order. So at this moment, at this point in time, I'm very neutral concerning the cable as well. Okay, the US dollar, Canadian dollar. This one I've been buying this US dollar, Canadian dollar for some time now. I mean, since last week, before that upside move started. Okay, and now you can see this okay, for a very long term from the weekly chart here. I mean, from 2002, you can see the way I've been able to model the movement of the US dollar, Canadian dollar. There's a 5-way move here and the corrective move that ended around here. And then at the end of this, that was at the beginning of this year, we saw US dollar, Canadian dollar moving so well downside. So after this kind of move, normally I'm expecting a deep correction. And for some time now, the card has been trying to make this correction upside. I'm actually looking at a correction that could be around here. Okay, something around the 61.8, okay, or the 50% correction. Okay, around the 50% correction, yeah. Okay, but at the moment, the correction is so shallow. So that is why I was able to spot this move here, especially when I saw that A, B, C, D, E, a triangle pattern ended here. According to the last video that I did, I was actually saying there that we should look forward for a buying opportunity around this level. And now it's no surprising that price moves is now moving upside. Okay, and now I expect price, once price breaks above this triangle, then we'll be looking forward to even buy more. Okay, down to this place. Okay, something somewhere around here. So at the moment now, US dollar, Canadian dollar, I still have a very strong bullish bias for US dollar, Canadian dollar. Okay. So that is for US dollar, Canadian dollar. So in the coming weeks, we can expect the US dollar, Canadian dollar to move upside. Okay, if this pattern is going to hold for a long time, if price is not going to change its direction. So at this point now, from here, we are going to be expecting a 5-wave move upside. Okay, something like a 5-wave move upside. So this is wave 1, wave 2. In fact, price is just about to end the third wave. The third wave can break above this level. Okay, and then we'll wait for a pullback, and then price will now rise up further. Okay, something like this. A kind of okay, a kind of 5-wave move to get to this point. So for US dollar, Canadian dollar, the bias is really upside. Okay, so we may see the US dollar Canadian dollar moving even more upside, okay, to somewhere around this level, um, around maybe 1.3830, and that level, or maybe something lower than that. But the minimum point I'm expecting at the move to get to is 1.356, which is the 50% correction of this move here. So A, B, triangle, and then we have the C wave around here. For US dollar Japanese yen, from here, look at this level here. Okay, let me actually go to the monthly chart. Now look at this level here. This we saw price breaking out of this trend line. Now it has pulled back to the level. This is a breakout pullback price action method. Okay, and apart from that, price is even getting to this level here. This is a very strong support zone. So when patterns are formed around this zone, it usually gives a very strong, powerful signal. And then at the end of this 5-wave move upside here, which is the first wave, we could see that price moves to 50%. So it makes this level to be very strong, the trend line, the support zone, and then the 50% retracement of this point. And now what pattern do we have here? Okay, I will show you the pattern that we have. We're having an ABC pattern. Okay, an ABC pattern ending around here. And then the extension of A from B is 261.8. So if you look at the combination of this Fibonacci measurement, support zone, trend line breakout, pullback, you will see that this is such a very strong level for price to get to. So I will not be surprised if price continues to move upside. Okay, as I have seen here, we saw a move upside and then we saw a pullback. So I'm expecting the US dollar Japanese yen to move even upside. Okay, especially if price is still contained here, and if price breaks above here, we're going to see even more move upside. So we can now label this as the first wave, the second wave. So we're expecting the third wave here, fourth, and the fifth. So we may see this kind of move in the coming weeks for US dollar Japanese yen. So we're going to follow this move very well. I took a buying order here, so I was not able to take a buying order at this pullback. So I'm still waiting for price to retrace well and see the very best place to put a buy order so that we can take advantage of this third wave. Okay, this is the kind of move we want to be part of. This third wave here. Okay, that is for US dollar Japanese, and the Aussie, very interesting. The Aussie is moving down seriously. We have actually waited for this for a very long time, and it now looked as if the Aussie is never going to come down again, despite all technical indices showing that the Aussie may actually come down. Okay, even from here, I like looking at the long-term view. From here, there is a 5-wave move in motion. Okay, this is the end of the third wave, and we can see the fourth wave here. The fourth wave in Elliott wave, that kind of correction, we call it okay, this is a third wave here. We call this kind of move an expanding triangle. That's an expanding flat pattern. Yes, an expanding flat pattern. That is 3, 3, 5 for those of us that are very used to the Elliott wave. And then at the end of this, we'll actually be expecting price to even go downside. Okay, and so we saw price move this way, the first wave, and now we are seeing the second wave here. Okay, even look at this second wave. The second wave here is a double zigzag pattern. ABC X ABC ABC X ABC. So that's a WXY pattern. Sorry for the labeling. It should have been WXY. Okay, it should have been WXY. And then we saw price moving. Initially, we put a sell order around here, but we're not able to reach our target as price pulled up. And then we're just looking at it that, okay, what is price trying to do? Are we going to see a violation of this move? So, but fortunately, price came here so deep. We label this as the second wave, and then we waited for price to break below this rising point here. I'm talking about this point. Draw your trend line from here, and then as price broke below here, and then we add a very strong proof with us that price is going to continue moving down, and now it's really moving down. It's really moving down. So I expect the AU to continue moving downside. Okay, even from the weekly chart here, we can see all these pin bars. Look at this, 1, 2, 3 pin bars actually show a sign of rejection. Okay, let's look at this one. Price was going up, the buyers were taking control of the market, and then we saw the sellers taking control that week. The early the next week, the buyers started taking control also, and we saw the sellers push back. The same thing happened here. And then last week we saw the buyers taking control of the market, and then the sellers towards the end they push it back, okay, to this level. So it now looks as if the sellers are gaining the momentum over the market. They are gaining control, and we may see price moving really down, okay, below this level, 0.68. Okay, we may see price moving downside, okay, to break below this level in the coming weeks, even months. So Australian dollar, US dollar, I'm very bearish bias about this one. I have a very bearish bias concerning Australian dollar, US dollar. So we may see price moving really downside. So well, as we continue in this kind of webinar, once there are other opportunities for those of us that are not in the selling trade already, once we get we're going to get more opportunities, because price does not just move downside like this. We can see a kind of retracement back to this level. After this move has ended, we may see a retracement, so that we can have those of us that are not in the sell trade, we may have an opportunity to join the sellers to ride this move downside. So the Australian dollar, US dollar is going to go down, all things being equal. Yes, all things being equal. And then the New Zealand US dollar is showing almost the same thing. New Zealand US dollar is showing almost the same thing. Okay, we can see here that from here we are having a corrective move, ABC, a long-term corrective move. Okay, and at the end of this, we usually expect a 5-wave move to follow, because though we have this correction here, a trend must have preceded this correction. Yes, a trend, according to a classical technical analysis, after a trend you see a correction. So this is a classic correction. So that means that there was a preceding trend, okay, before this correction. And now we could see price is moving this way, 1, 2. Okay, price moved from here around let me check the time, 2014. That was June 2014. That was when the move started. Okay, the New Zealand dollar, US dollar move started, and then we're seeing a kind of correction in September 2015, a move upside. So what I'm really interested in now is to look at this move. Okay, what kind of pattern we are having here, because this is a correction from 2005 up to this place is a major correction. Looking at the weekly chart is a major correction. So we have to see what pattern we are having, so that we can take advantage of the next big move. Okay, this could be actually what we call a double zigzag. Sorry, a triple zigzag in Elliott wave. This is W, X, Y. So at this moment now, I'm expecting price to move downside, probably somewhere around here, somewhere around this level here, maybe around 0.6959. So that's the long term. So expecting price to come down to this level before it now completes this pattern, because I don't think this correction is ended. If this is wave 1 and this is 2, normally we expect the second wave to correct to 61.8% of the first wave. So the long-term view of the New Zealand dollar, US dollar shows that price may still move upside up to this level, but we are expecting at this moment a downside move. So how do we take advantage of this move? Okay, of this move downside, since we have identified that the intermediary trend now is downside, as we have seen here. So how do we take advantage if we are not already in it? The move that started last week, okay, we can see it 1, 2, 3, 4, 5 move. Okay, can we see that? 1, 2, 3, 4, 5 move. 1, 2, 3, 4, 5. So at the end of this kind of move, you usually see a correction. No, I'm not plotting the correction. Let me delete that. So we usually see a corrective move at the end of that. That is A, B, C. Let me change the let me change it to this. Okay, so we will be expecting a three-wave move after the after this movement is over, because at a point this movement is going to be over, as this is the first test of the first proof that price may resume downside. This is a 5-wave move, an impulse wave, so we'll be expecting a correction. So once we're able to see a very viable correction that is considerably deep, up to 61.8, then we can be looking for we can look for a selling opportunity around there. So you can now confirm with other technical tools, other things that you use to trade the market, probably your moving average, your momentum, or your expert advisors and all that. So what the Elliott wave helps us is to know the direction of the market at the moment. When a trend is over, like here we spot at the end of a particular trend, an intermediary trend to be over here, and we're now expecting a move downside. So that is the information that the Elliott wave gives us. So at this moment now, we will be looking bearish. So what we'll now be doing is to look for the a very good place, or a very good price level where we can put a sell order if we have not even actually sold around here. So we'll be looking for where we can join the sellers, because it's almost obvious now that the sellers are going to take control of the market in the coming weeks, unless price rises up and breaks above this level. In as much price is contained below this level, then the sellers are going to take control of the market. So as a short-term trader or a medium-term trader, you just wait for a pullback. If you're able to see a kind of zigzag pattern around here, stopping at 61.8, then one can then take advantage of an expected third wave. An expected third wave, okay, in this direction, a direction downside this way. So when you want to trade the third wave, you want to trade the fifth wave. These are trendy moves. Okay, these are really trendy moves. So if price is able to correct, okay, down to probably 61.8 or maybe 50%, then we're able to see a real corrective pattern. Then we'll wait for price to make this first wave move, and then we'll trade the correction of this move. Okay, and then the stop loss can now be put here, and now we can now take advantage of this. Okay, can we now see that Elliott wave helps us to identify the trend of the market within any time frame at all, and we can, assuming price is able to get the 61.8 and then moves this way before it now corrects around here, and you put a sell and a stop loss. That means your stop loss can be around that 30, 35, and then you take advantage of this a kind of move that could give around 150 pips. Okay, from like 32 or 35 to 150. So that's about 1:5. And if you are a type that likes that not that aggressive, you can even put your stop loss there. That's 77, and take advantage of a move that could go as low as this. That's about 250. So that's about 1:2. So Elliott wave provides us a very good ground to take trades of high risk reward ratio. Yes, of high risk reward ratio. So that is New Zealand US dollar. Let me take us to the other ones. This is the gold. Okay, let me not take you through this gold. Let me show us the other ones, like the CAD yen. Okay, this is the CAD yen. The CAD yen also, from the weekly chart, Elliott was able to give us the information that price is in a downside move, something like this. Okay, this is an ABC. This is a corrective move, and we are in a trending move. Okay, this is wave 1, wave 2, wave 3, wave 4, almost wave 5. So normally we would be expecting price to break below here. Yes, break below this level, because this is the starting point of the last corrective move that we had, and then we will be expecting this trending move to break below this level here. And I'm looking at what we are having right now at the intermediate levels. Let me remove all this. Remove this. Let me remove this and this and this. Okay, and then let me reduce this one too. Okay, and then this one like this. Okay, so we can see what is happening here. There is a 5-wave move downside. Look at this 5-wave move downside. There's a 5-wave move downside. Wave 1, wave 2, wave 3, wave 4, wave 5, and then an ABC correction. Can you see this is a classic Elliott wave pattern, and then we'll see price breaking below here, and then what is happening? Price is moving down. So that's why we're going to see price moving down to break below this level. So a smart trader will have traded after this corrective move here, but I was not able to get into this trade because this correction was not that valid. So, but very soon we're going to see a major correction happening. We may see a major correction happening, so that we'll be able to take advantage of the move. Okay, so that will also be part of the bearish move. But at the moment, price is going down for CAD yen. It's very much obvious that price is going to go down after this move, and then this correction. Price is expected to go down. So this week, in the coming week, I'll be expecting price to go down. So on Wednesday, I'm going to present another webinar where I'm going to show us where we'll be expecting to take trades opportunity, where we should be expecting price to get to before we use other tools to take advantage of the market moves. So that is CAD yen. CAD yen presently is going down. So if we're lucky enough, we may see a good correction up here. Okay, but at this moment, I want to see what pattern, what impulse pattern this wants to form before I now wait for the correction. Okay, I actually saw this earlier than this, but I wanted to be sure because I was having an alternative move. Something like 1, 2, 3, 4, 5. I was expecting price to go up, or if it breaks below this level, okay, to go down. Now that it has broken below this level, I have to take this count as my preferred count. Now I'll be waiting for a major correction before I pull the trigger to sell. So we have to be very patient. We can't catch all the moves. We have to be very patient. And now G-Card has completed a 5-wave move downside just here. And now we can see how price is reacting to that. So this 5-wave move, they are very, very reliable. Okay, they are very, very reliable. So this is a 5-wave move. So we're expecting a corrective move. So GBP CAD can is expected to go upside, okay, in the coming weeks or even months. GBP can expect to go upside. Okay, so how do we take advantage of this also? This is almost gone also at the moment, but we are going to wait for a major correction. We're going to see a major correction. They always happen. Let me say they often happen. Major corrections often happen. So we may see a major correction. But at the moment, we can't really lay. Okay, we can label this with 1, 2, 3, 4. Probably we are going to the 5th wave. Okay, once the 5th wave is ended, let's look at some Fibonacci projection to that. Let's look at 61.8, 0.618. 61.8. Okay, so the next level to look out for is this place. Is 1.7637 according to the our Fibonacci tool. So price may rise, okay, further to this zone. Okay, so it makes this zone to be a very strong zone now. So if price gets here, we may probably see a real pullback like this, okay, before price now resumes the move upside. Okay, so we're going to be waiting for price to get to this level. Expect a pullback to probably 61.8%, 61.8% of Fibonacci ratio. So you can see I've already done the modeling, the forecasting. So that is how we forecast the movement of the market even before price gets there. So now we've already decided on what we want to do. We're just waiting for price to play in. Once price is able to play in, then we're also going to key in and then take advantage of it. So it helps us to be able to give the market what price we want to buy or we want to sell or what pattern we are expecting. So what we just need to do is to wait for price to connect to us. If price doesn't connect to us, we don't have to be following the price movement up and down. So we just wait for price. We just, we need a lot of patience in trading. A lot of patience is needed in trading, especially when you are an Elliott wave analyst. And that's why if you are very good at using Elliott wave tool, you have a very incredible hedge, okay, and you're going to be winning more often than not. In fact, you're going to have a very big hedge over other traders because you are not following price up and down. There are levels you are looking for. There are patterns you are waiting for, and you have to wait. And if price does not get there, you don't have any business doing anything other for you to just wait and see what price is trying to do, draw a very suitable patterns that goes in line with that. So if price does not give us a very reliable pattern, then there's no business putting that trade. Okay. Now another thing is that what about if price does not get to that level but pulls back to this place here? Okay, then we are going to adjust our move, because even from here, this could be a third wave, a fourth wave, a fifth wave, and then an A, B, C. Okay, that means that we are now going to we'll now adjust. Okay, this is the Fibonacci. Okay, we'll now adjust. Let me actually delete this. We'll now wait for 61.8% retracement of this, because the market can be funny sometimes. You may see this thing that is going up here, you may just see it coming down again. So this could be another A, B, C, and then we are going to be waiting even around here to place a buying order. But the way it's looking, the momentum is so high, we may have to label this as the fourth wave and this as the fifth wave, and then wait for price to get here, wait for a pullback, and then put in a buy order around here. Okay, so that is it. So we need a lot of patience. Like I said, a lot of patience is needed. Elliott wave allows you to be very patient with the market. You're not going to be trading a whole lot of things. You're not going to be making 5-10 trades per day. You're not going to be making trades every day, even every week, depending on the time frame you are looking at. In fact, sometimes you may get like probably 2 trades in a week, 3 trades in a week, if you are even trading the short term, let's say 15, 1 hour, 4 minutes, and all that. You may see like 3 trades in just 1 week. Okay, so it allows you to reduce over trading. Like I said in the other when I was looking at the slides, it's Elliott wave helps us to reduce over trading, so we don't have to be following price up and down. So according to this GBP card now, we have an expectation, and if price does not fall within our expectation, we are going to ignore it. And then that doesn't mean that we are going to leave it. What that actually means is that we're not going to open any position. We'll just be adjusting our account according to the Elliott wave rules and guidelines. And then once we have something very suitable, then we key in, just like we had in US dollar, Canadian dollar. When the triangle was completed, price showed a sign of movement upside, and then we keyed into it. The same thing happened to Australian dollar, US dollar. You keyed it in, key into it rather. Okay, so I'll be going to Euro GBP now. Now Euro GBP, we also spotted this. If you follow my blog very well, we spotted this move here. This move, you can see we have a 5-wave move upside. 1, 2, 3, 4, 5, and then this 5th wave. Okay, let's actually go to the, look at this first of all. Look at this. Look at this level here. Okay, let's say, I think I also saw something like this. Okay, no, something like this, you know, something like this. Okay, no, okay, that was no point there. Okay, but there was a point here. Look at this. This is a counter trend line. Price broke below it and now tested it, and now it's moving downside again. But at this level, something interesting happened after this correction. Okay, we saw a 5-wave move upside just here. 1, 2, 3, 4, and then we saw the 5th wave upside there. And no brainer to that way. Once the pattern is completed, you just don't hesitate. You just put in an order. So we put a sell order around there, and price actually moved down to our target, which was actually around here. Okay, but we did not wait for our target to hit. The reason is that the movement from here, the movement from this level here is a 5-wave move. So at the end of this 5-wave move, though this is 1 hour chart, we're looking at the daily chart before. This is the 1 hour chart. So after this 5-wave move, you will be expecting an ABC pullback. Generally. So we did not want to lose part of our profit, so we had to exit, and now we are now waiting for a pullback to happen somewhere around there. We usually wait for 61.8. So for Euro GBP, we can wait for 61.8 retracement. Okay, somewhere around there. So we can see the ABC can be completed around there. So that is ABC. 1, 2, 3, 4, 5, ABC. So once that happens, we can now take a selling order somewhere around here. Okay, if you see a very good corrective pattern like the zigzag and other patterns, we can then take a sell order here. Just like I said the other time as well. Now we have an expectation. As an Elliott wave trader, you always have an expectation. You give the market what you expect based on the analysis of the past movement. So you forecast into what you expect the price to do. So at this moment now we are the bias is bearish. We're expecting a bearish move. By the end of this move here, this is a 1 hour, 15 minutes, and all the rest. According to those ones, that degree, this is a trend. Yes, according to the 15-minute chart, 30-minute chart, let me go to the 15 minutes. This is a trend. Look at it. It's a trend. 3, 4, 5. This is a trend. And after such a trend, you are expecting a correction. So that because we think the weekly chart is going to says that, or the daily chart says that the price is going to be going, does not mean that when you go to the 15-minute chart, you are not going to see a major correction there. So according to the 15-minute chart here, we are expecting a major correction around here. Okay, before we now see a far bigger move than this one. Okay, we now see a far bigger move. So, and that is where the juice is. You want to trade where the juice. You want to join the party. So you only see the party at the end of the second wave. So that's why most times I wait for the end of the second wave and I'll join the move downside with the stop loss here. Why is the stop loss there? Because the Elliott wave theory says that the second wave does not retrace above the starting point of the first wave. Okay, so that shows us again that the Elliott wave, one of the importance of the Elliott wave is that it provides us with a point of run. So this is the point of run for this pattern. So if price, if we can put in a sell order here, and then this is where we're going to put our stuff, because it is at this point that we can say that our pattern is completely wrong. Okay, so at this point now, Euro GBP will be waiting for a pullback, a deeper pullback than this. Though that doesn't mean that price will not continue move down, but at this moment, this is what I'm looking for. So if price moves below I'm going to withdraw my patterns, my counts, and then see what again I'm looking for. Okay, based on the new count. So that is what Elliott Wave provides for us. It helps us to follow the market closely and then be very patient with the moves, set up an expectation, wait for the market to click in, and then we now connect to the market. So that's the wait for the market to connect to us before we connect to the market. So we don't have to be following the market up and down. Okay, you don't have to be buying and selling here and there. Okay, so that is that Euro Australian dollar. Euro Australian dollar was one of those trades we took in my group. One of the trades we took in my group last week. I see the move up here. Okay, from here, from this level, weekly chart. Okay, that's loading. Okay, now from the weekly chart here, we could see that a 5-wave move happened downside. And like we have established that after such a move, you are expecting a move upside, a correction. This is A and this is B. Now you look at this B and ask me what pattern it is. Yes, this is a flat pattern. A, B, C, A, B, C, and then an impulse wave, a motive wave here. So what kind of flat pattern do we call this? This is a running flat. The running flat is like this. It's a kind of correction that looks this way. A trending move like this, and then you're not having a correction that looks like this, something like this. Okay, so this is the first leg of the correction, the second leg, and then the third leg. Okay, now the second leg does not get to the starting point of the first leg, while the last leg does not also get to the starting point of the second, and that's what we're having here. The first leg here, the second leg does not get here to the starting point of the first leg, and then the okay, this is the
sorry, we were cut off from the webinar, so I will continue offline and then link it with the other video so that we'll get what I'm talking about. Okay, so this is a Euro Australian dollar. Let me take us to what I have, Euro Australian dollar. Okay, and then we're talking about this corrective move here, this ABC corrective move. We're talking about that, and I was talking about a flat pattern that looks like this, a kind of A. This is the first move, this is the second one, and this is the third one. Okay, this kind of flat pattern is what we call a running flat. According to Elliott waves, called the running flat. Okay, it's like it's running. Okay, it's a running flat. So it's something like this. Called this is A and B, and this is C. Okay, so the first leg here is a 3-wave. The second one is a 3-wave, longer than the first wave. It takes the starting point of the first leg, and then the third leg is a retracement of the B leg. It does not get to the starting point of the B leg. That's one. And then the third leg here, the C wave, is a 5-wave move, a kind of multi-wave, and that's what we can see here. A, B, C first leg, A, B, C second leg, and then a multi-wave, 1, 2, 3, 4, 5 here, Euro Australian dollar. So the pattern has completed. This is an ending diagonal. Ending diagonals are very sweet patterns, very, very interesting. They move very well. Ending diagonal gives about more than 1:3 risk reward. I mean, you risk $10, you are getting $30 or more. So that is what the ending diagonal is capable of giving us. So it will be so surprising if price come down and then breaks below this level. But I'm actually expecting price to continue moving upside. Okay, to continue moving upside. So that is the buyer. The buyers is sorry, is bullish. Okay, and how was I able to take actually a part of this recent move here, recent upward move, but I was able to take that after the pattern completed here. Then we saw this move up here. Let me go to a lower. We saw this move up here, a 5-wave move, and then a correction. Okay, normally this is the end of the diagonal here. The diagonal ended here, but normally at the end of the diagonal we're expecting a breakout, and then the breakout is usually caused, or is usually an impulse wave usually breaks out the diagonal. And then I saw the first wave, and then this ABC, you can see this ABC here, A and then B, a triangle pattern, and then we saw C wave 1 2 3 4 5 with a double bottom. So it's a no-brainer for me to wait for price to break above this level. And once price broke above this level, took a buying order with stop loss here. That's about 130 pips, and then price is actually going up, given more than 1:2 at the time of recording this, and price is going to continue moving upside, but at this moment we may see a pullback, okay, before price continue moving upside. But I'm not that sure if the pullback is going to be very deep. Okay, I'm not sure if it's going to be very deep. I will like to see something, or we may see something that goes above, okay, something like this. Okay, the first wave like this. Okay, after that very significant break above, we can now wait for a pullback, okay, around there, and now look forward to take another buying position, another buying trade. Okay, so we would like to see a corrective move here, probably a zigzag pattern. Okay, so before we now see what our price is actually saying at that point in time, and then take a bullish move. So that is a buy raw Australian dollar. I'm going to update you as it goes if you are not part of the bullish move already. And the next one is the Euro New Zealand dollar. Euro New Zealand dollar, just like other Euro peers, we're expecting price to move upside. Look at this this counter trend line here. Then look at this double bottom. From here we saw a 5-wave move, and then we saw an ABC correction. Okay, so price already reacting to that. Okay, reacting to that. So the buyers here also is a bullish move, especially if price breaks above this trend line here. Okay, substantially above this trend line. So if price breaks above here, okay, something around here, that was going to be a full breed movement upside, okay, which is going to take a very long bullish move. So we may see Euro New Zealand dollar moving quite upside. So my bias here is strongly bullish. So it's strongly bullish. Then ABC correction here, and then price should move upside. ABC. If we should follow this move, that means in the coming probably coming years, a couple of years, we may see Euro New Zealand dollar moving so upside. Probably the New Zealand is going to fall very well, or the Euro is going to rise very well. So something is actually going to happen that will make the new trend, this trend here, to continue. Okay, to continue. So Euro New Zealand dollar, we are also looking at that very closely. So presently the bias is bullish. A break above here is it will be very strong enough. And then we have the Australian dollar card. We saw this move sometimes also. Okay, look at this trend line here, and there was a correction. Look at this ABC, and then we are also seeing another correction this way. Here, ABC, a flat. It is a zigzag. This is a flat, and then we'll be expecting another zigzag move downside to give us a double zigzag. This is a corrective pattern. We want to see another corrective pattern. So that means that the Aussie card has been in a very, very corrective, just sideways movement since 2001, the early millennium. This millennium we've been seeing Aussie card moving in a very in a sideways direction. So we may see an ABC move downside, okay, to come to this point also. So the bias for Aussie card is just bearish. Okay, this should be a very strong one, because if we should think that Aussie peers are going down and the Canadian US Canadian dollar is going up, that means the Aussie CAD is going to go down, going by normal market correlation theory. Okay, market correlation theory. So I expect Australian dollar, Canadian dollar to move downside. Okay, so how do we take advantage of that? After this 5-way move here, this move, we saw a correction here. Okay, so a selling order should have been placed somewhere around here, and then price is going to move downside. So we'll see how it goes, but presently I expect Aussie CAD to move downside. I know that there will be a point where we're going to get another selling opportunity, just like there was one here. Okay, there is another one here. So this is for wave A, and this is for a wave B, or it could also be a 1 2 3 4 5 move. So we also be taking close look at this one. So these are the ones I can share for now. On Wednesday we're going to do another webinar where we're going to look at how all these all the currency pairs we talked about, how they fare. But before I hang up, let me take you to the gold market. Okay, this is the gold market. The gold is also giving us some very nice move. Okay, after spotting the end of this move here, that was early this year, I spotted this this move here. That price was going to go up after this ending diagonal 5th wave, and then we saw price really moved up. So such a very interesting one. And how did they move up? Just as we have expected, a 5-wave move upside. And at the end of this 5-wave move, what do we expect? We're expecting an ABC pullback. Okay, so I'm expecting gold to move downside. Okay, looking at this, this is a wave 1, wave 2. This is a sub wave 1 of 3, sub wave 2 of 3. If price breaks below here, then the bearish move is going to be all but confirmed, and then we'll see move downside this way. But there is an alternative to that. There's an alternative to that. That is this. That means because we have a something like that looks like a zigzag move here, this could also be taken as a zigzag move, another zigzag move. Because of this kind of movement we are having here, there is a possibility that gold is going to move this way. Okay, that means that the 5th wave is not yet completed. It could give us something like an ending diagonal move, which often ends which often defines the end of the 5th wave. So this is 1 2 3 4 5. This is very probable, especially if price breaks above here. But if price breaks below this level, then all the bearish move will all but confirmed, and then we'll now be looking for a bearish trade opportunity. But at this moment, there's no I'm in between the bullish and the bearish until the road is clear. Okay, thank you very much. This is Sami Adiago. I really thank you for joining in the webinar, and I will see you on Wednesday. Okay, thank you very much. Bye.